Hey everyone, what's up? It's myself, James Preston.
And myself, Graham Tennant.
And we have a special guest there as well, Paul Francis. Welcome to Global Crypto's Market Analysis.
Hey, how you guys going?
We are good, man. We are very good. It's great to have you along. It's great to have you alongside us today.
Yeah, good to be here.
Welcome everyone to this live stream of episode 60 of Global Crypto's Market Analysis and this new format of live streaming. It's working really well, even though we can't keep it under 15 minutes. We just ramble on for half an hour. We hope you guys are okay with that. This episode is proudly sponsored by Block Alpha. Block Alpha are a Durban-based outfit, and they have been doing some great things in the crypto space. They have had a daily crypto signals group, which they have been the market need at the moment.
There we go.
Is he back?
Who was also at Binance. You may recognize them.
We're battling to hear James. It seems like there's something wrong with his internet connection. I'm sure someone will let him know, but if he does come back, we'll let him finish the introduction for the sponsors. Are you still there, Paul?
Yeah, still here.
Hi everyone.
Got you.
I have no idea what happened there. I did not click anything, but it is what it is. So guys, go check that out. The link is in the description below, and tune in for Block Alpha's live webinar tomorrow with Brenton Nyker and Linley Pillay. Find out what they're doing as well. 11 a.m. tomorrow. Okay, long introduction over. Graham, things are looking wild at the moment. Take us through the first couple of charts that you have for us.
Great. Well, we'll jump straight into Bitcoin. There we go. Can you see my screen clearly? It's the right screen.
We can indeed. Looks great. Yeah.
Okay, great. So, yeah, I mean, interesting times. I've just highlighted on our chart there the two Elon moments where he decided to get his fast fingers out and tell the world what he thinks about Bitcoin. So that gave us a fairly big move out of this falling wedge, which was gave us quite a lot of sideways action on Bitcoin and a little bit of a rest period. Since then, we've been moving up strongly and going into a little bit of a consolidation squeezing period now, where we've just kind of been grinding up, slowly but surely. And we've also gone through the 50,000 mark, which also grabbed some headlines. And I know that the financial media is just all on fire, about Bitcoin and cryptocurrency, etc. So, but yeah, look, my personal strategy recently has been to stay out of any short-term trades, specifically on Bitcoin and Ethereum. You'll see on the Ethereum chart that we're also getting this slow grinding up pattern, which isn't really conducive for shorter-term trades. But that has allowed me to turn some attention to some altcoins, and particularly the developments around Binance and the new smart chain. So look forward to sharing some info about that as we go along.
Yeah, well, it looks like the alts are really heating up, which is why I've titled this episode, Is It Alt Season? So I'm excited. Where would you start, Graham? I'd imagine ETHBTC, as I wrote a little bit of a thesis today, ETHBTC would kind of be the first place to start to sort of gauge the strength of the altcoin markets, perhaps?
Yeah, sure. So keen to jump into that chart. Just quickly before we get there, this is Ethereum dollar, and we can see also this grinding up and this rising wedge that's forming. And typically I would be pretty concerned about this type of structure because rising wedges very often do break to the downside. But given the macro super bullish structure that we've got, these rising wedges are tending to break to the upside quite impulsively. But just something else to highlight, and this was shared by one of the members on the SA Traders WhatsApp group, is to just show this the institutional movement into the market. So I won't spend too much time on it, but it just shows you where your whales have been buying. So this shows you purchases from wallets where there's between 1,000 and 10,000 Bitcoin in that wallet. So that's quite a lot of fiat valuation wise. And you can see where they've been buying. So they really bought down at this dip which was around about 2018, and now most recently with Tesla and MicroStrategy and a lot of of your big institutions announcing their purchases, you can see that this is where they've been really active. And how they've tended to buy is they've been buying very shallow dips. So that's been part of the reason that we've had this price movement with a slow grinding up, because as soon as there's a bit of a sell-off, the institutional buyers sweep in and buy that up. So that's really what's kind of led to this slow grinding up price action that we've seen recently. So yeah, just a little bit insight. So for me, if you are looking to get into the market, I would look to do what institutions are doing. Just buy those shallow dips, be patient. But as we do grind up further and further in this type of fashion, it does become higher risk for a big break to the downside at some stage. So we are kind of building up, I think, the possibility for that outcome. But for now, we're just grinding up, and we'll see how far we go. But as far as leverage trades are concerned, I'm not keen to get involved with Bitcoin or Ethereum with any leverage at this point in time.
What about some of the others? I mean, would you say we're in alt season?
Yes, I would. So let's have a look at the Ethereum Bitcoin chart. And Paul, I know that you look at this chart quite a bit as well. Do you want to give some of your insight?
Yeah, so keep your screen up.
Cool.
You've got the right rule, your inverted head and shoulders, looking for Ethereum to take 6% per Bitcoin. That's still the main target. I don't think this is going away. I don't think this is going to the downside. We might get that consolidation now where we are as just another wind up for Ethereum to gain some strength against Bitcoin. But it's all Bitcoin now soaking up all the new money into the markets, which is probably why this is taking a little bit longer than we would like. So I think Ethereum is going to be second. It's always your second fiddle to Bitcoin. It's just going to take longer. Bitcoin's going to run first, and as it starts to slow down or lose a bit of strength, we'll see Ethereum. Yeah, that's it. That's the draw. That's what we're looking for. But yeah, good time to be getting into Ethereum for sure.
Yeah, I think if you're looking to build up the position, again, be patient. I think because in these rising wedge type of structures, you do expect to have some volatility at the end of the road. But good time to be starting to build up some Ethereum exposure, especially in Bitcoin terms. So yeah, this is the inverse head and shoulders that Paul chatted about. There's your left shoulder, your big head, right shoulder. This is the neckline that we've broken through. We've come back to test, and yeah, we've chatted about this, I think, in the last 2 or 3 market analyses that we've had, and I expect that that there's decent potential that we get some kind of wind up over the next little while, but then a break to the upside. This target is measured by taking the distance from the bottom of the head to the neckline and projecting that to the upside, and that gives us about as we said, is 6%. The Ethereum price being 6% of the Bitcoin price. And that would be the target. And just another way to look at that, if you take it from our current price here to a little bit lower and you project that to that 0.06 target, that gives you a 65% outperformance that we're expecting from Ethereum. So if we just round that down to 50, so I've got just the number of 50% in my head. So if Bitcoin does another, let's say 20% from here, then I expect Ethereum to do 40%. So I'm expecting almost double the return from Ethereum than Bitcoin.
And that would put, I mean, conservatively, if Bitcoin stayed at $50,000, 60% of $50,000 would put Ethereum at $3,000. So indeed, I mean, that's some great performance against the US dollar, let alone the Bitcoin price. Yeah,
so it's definitely a way to potentially grow your Bitcoin valuation in Bitcoin terms. And given obviously the really strong performance of Bitcoin, and we expect it to go, that's not easy to do, is to find assets that could potentially outperform even what Bitcoin is doing. And now, what are some of the others? Graham, I know you and Paul had discussed how you wanted to go through a couple of charts. Do you want to take us through, or when are we going to hand over to Paul? Go for it, Paul.
Yeah, I can jump on,
Telegram. You've been a bit
Is
more active in trading those leverage positions than I have recently.
Yeah, so for those of you that may not know, if you're on the WhatsApp group or you're joining us from Twitter, Paul Francis is a longtime member of the global crypto community, but has really stepped up his trading game in terms of his charting, and the analyses that he's been providing on some of the altcoins has been incredible. People are loving your charts, Paul, and so it's a real privilege to have you with us live today. Let's have a look at what you have, and thanks for joining us.
Yeah, no, thanks for having me on, James. Glad to be making some sort of headway and hopefully a positive influence for the guys on the groups that are kind of following. It's always good to practice your own risk management and make sure you trading within your means. But yeah, it's always good to get some opinions, put forward ideas, and share what information you've got at hand and what you've learned. So what we can look at here is something slightly different. This is the Ethereum dominance chart. This is a weekly. So this will show now everyone's familiar with your Bitcoin dominance in terms of your market cap. And I like to look at this one more recently because it's showing our alt strength as well. So Bitcoin dominance at the moment, 61%. Ethereum dominance, nearly 14%, which leaves the rest to alts. So as we see, this is, it lost a whole bunch to Bitcoin over this period of time, 2019, as Bitcoin was eating up. But as we go into the new year, Ethereum is shown it's gaining some more market share, but our alts are really taking off when Ethereum starts to lose some dominance. So that's your Binance and the likes. So yeah, I don't really trade off this. It's just an indicator. Keep in mind strength of Ethereum alongside your ETH/BTC charts, and yeah, something worth keeping an eye on, I guess. When Ethereum wants to go, I think we're going to see it here probably first.
So if I can just highlight something on that chart, Paul. Yeah, I think there's two periods recently where we've seen really strong growth on the Ethereum dominance chart the last couple of months, because that's a long-term weekly chart. But that most recent move, I think that was the real DeFi mania that we had, where gas fees really have taken off. But in that strong performance that Ethereum has had, that's given a chance for other platforms to come in and provide lower cost fees for some of your DeFi type of platforms. And I think that's what we're seeing now is a potential move, well, at least not as much flow into the Ethereum DeFi space as we're seeing potentially going into Binance. And we've got Cardano launching their smart contracts soon. Tron has also been making some noise about that. So I think that's a trend worth keeping an eye on is the DeFi space as that develops.
Yeah. I mean, you probably know more about the Binance sort of space than I do. I'm just the guy looking at the charts, trading taking the leverage trades purely based on charting. So no fundamentals here. It does help to get an idea of I think you're trading.
One thing that Graham has taught us repetitively is that it's the charts that don't lie. The charts tell you the price, they tell you the volume, they tell you what's happening, and price is king. And I think that's really something important for traders to learn. You can get so much purely from analyzing the charts on a technical level.
Yeah, 100%. And that's how I've always done it. I mean, but yeah, I would say not always. When I started, I was looking at fundamentals, and it becomes a guessing game. I think this project's going to do well. I think that one's going to do well. But it doesn't matter what you think. You've got to look at the charts. That's where it is. The proof is in the pudding, like Graham said. So yeah, I've moved over to just getting the charts right, getting the draws right, and it's starting to really pay off. I mean, here's DeFi. It's gone from $700 to over 2,000 in 2 months, 3 months.
And just to clarify, is that the index, Paul, the DeFi index?
Yeah. So this is all of it put together.
And that is tradable on Binance as well.
Yes. So I'm purely trading on Binance platform. It does have all the right alts, be it so your larger cap coins. Yeah, your liquidity is there. It's not a speculation always. And another nice thing I like about Binance is it costs a lot of money to list with Binance. Smaller projects can't list their coin on Binance because it eats so much of their capital. You find you're trading a slightly more reputable coin than something, let's say, I don't know, on Bittrex or one of the smaller exchanges.
Right.
So I think, so I've moved to Binance, stuck to that, and they've got enough coins. I mean, there's plenty out there at the moment.
So take us through a couple of pointers here on this DeFi chart. What are you reading at the moment? I mean, that looks like a bit of consolidation the last couple of days, and a couple of people have been excited about this chart.
Yeah, so very similar to Graham. We trade probably the same way. Graham played quite a big role in my initial move to trading, where we both trade your squeeze. So there's your squeeze. I used a couple indicators to give me a better idea of it. We've got it's called the HV, which is the historical volatility. So you can see, as this goes down, the volatility is becoming less and less. Your candles are smaller. Let's just move these out the way. We've got a lot of spinning tops here, dojis, and as that squeezes, that's what we look for. That's what we want. Real small, tight price action, and looking for that big explosive move. So it's pretty good on this one, I would say. Not the best. It is a bigger coin. The price is higher. It takes a lot more to move. So if we go to Binance, guys say things don't go up in a straight line. Yeah,
look at that. It's shooting the lights out at the moment. It's just off the charts. Literally off the charts.
On a 4 hour, I mean, there was my target, which I posted on the group. I probably posted it somewhere around here. So I gave guys enough time to get in. And I haven't closed it for obvious reasons. I mean, it's gone up straight in a straight line. You don't really see that often. But the concept is all the same. Your squeeze is there. There's your squeeze. Real low volatility here. Small spinning top candles, spinning top dojis, spinning, it just means it's going up literally nearly every time. So it's a pattern I'll always follow. I'll only trade this. Something, spend a lot of time learning, and that's a great trade. Binance has probably got a bit more fundamental behind it, which has taken it to those lengths. I think Graham's got a bit more to share, but I'll run through a couple other ones. Dash was a good one. That took off today or yesterday. I posted on the group somewhere around here. Again, there's your squeeze. Right in there. Tight, small candles, low volatility, good volume. And on the break, there's your break candle. Some good volume there as well. So alt season, you asked the question. I think the charts are telling the story here. It has been a bit slow, but I like this coin for its fundamental. It's got a big market cap. The guys behind it are actually quite well known, but it's been around, and a lot of these coins have survived your previous bull market and bear market.
Yep.
if you look at the ones guys are trading, Binance was around, Dash, it was there, ADA was there. So for me, that gives it also a good indication that it's a better trade than trading something like KNC. I don't even know what that is. Luna. There's so many coins out there. Yeah, the ones that are going to go are going to be the ones that have made the bear markets, in my opinion.
And what about Link? You don't have that chart on hand, do you, Paul? Because a lot of people have been talking about that, and I noticed that you posted a couple of comments about Link earlier today. It looks like it actually took off today.
Yeah, so Link was good. I took this trade probably, when is it, 2nd of Feb, and because of this slow move, it started to go, came back, and it looked like it was going to go again, and this drawdown kind of put me off Link. It wasn't looking great, but there it goes. It didn't quite hit target before another slap in the face, and then the slow grind up to eventually getting there. For me, when this is too late. You're in the trade too long. For me, if you've gone past this period. So this is a predetermined time that I look at. Your fees start picking up on these exchanges real quick, and you don't want to be just paying funding before you're hitting your profits. And that's kind of put me off this setup. So Link is a great coin, like you say. Everyone's backing it. There's your squeeze in there. You could have got some entries probably on this bounce here, on this last low, and it seems to have triggered. We'll probably see something like that. But the first initial move here was a long consolidation as opposed to this, and it didn't really snap. So I want to see the real snap after this long period of slowly moving. You want to see that straight up. If you look at Dash has been pretty quiet, slowly grinding, but a long consolidation often sees the big move, which is kind of what put me off this one. So I didn't want to get stuck into this trade, and then you see something like that again.
Right.
I think that partly means that you're a little bit spoiled for choice, because there are a number of very good setups at the moment on the alts. So you've got a lot to choose from.
Yeah, to be honest, I don't have any more risk to take any more trades, which upsets me a little.
Well, the question is,
yeah.
take us through XLM, and then I want to ask you the question about when do you take your profits so that you've got some more powder in the bank to open some new trades.
Yeah. So that's a good point. XLM looks like a great trade. Again, we can see, there's your squeeze in there. Here you can see all your spinning tops, dojis, hammers, real tight. Looks like we've broken this last high. So there would have been your last relative high. It seems like we've broken, come back, and I think we'll still bounce here. Key points I always tell the guys on the group: low volatility. Your price is really getting tight. Low volatility, volume is good. Volume and candle though.
What for you determines good volume? Because on those bars of volume there, I mean, those are quite low in comparison to the previous move a couple of days ago. So is there a number that you're looking for in terms of volume, or is it just the bars are higher than before things really cooked back in January? So
I use it's called the on balance volume, and it's this yellow indicator here.
Right. Okay. So it's not the bars at the bottom. Okay.
Correct. Yeah. So what it does is it adds up all of these candles. So it adds the amounts together, and it gives you a sort of average line of how good the volume is. And if this line is high up here, we know the volume is good. So it's not one big blast. That we'll look for on the break for sure. That's what you want to see. You want to see when we break this the last high over here. You want to see a big candle there. You know, that's your most ideal situation. But we haven't seen it. You know, Graham pointed out Bitcoin's just walking up. It's walking up. Ethereum's walking up. It's not setting up trades for the retail guys. You know, it's setting up rising wedges. No one trades a rising wedge to the upside. You know, but every time it's breaking to the upside. So the retail guys are kind of getting left behind in the bigger obvious trades. So it's a difficult market, I think, because it's super bullish. It's just going to keep, you know, you're walking up, no big consolidations on Bitcoin or Ethereum for that matter. Ethereum you might see a bit more, but I think institutional money comes in a lot slower, you know, and that pushes the price. You just walk instead of consolidating and then exploding.
Yeah,
all right. Well, Paul,
it's generally patient money, and it's buy the dip money. Your retail trader money is often, you know, chasing the green candles. And that's when you see there's big blow off tops, and that's why unfortunately the retailers are generally buying high and selling low, and the institutions are buying low, selling high, which is the goal.
Yeah.
So, Paul, I want to come back to the question I was going to ask you about
the target.
Some of those other trades that you're currently in, where you stated you currently don't have any sort of risk capital to play with. So you don't have right now capital to invest in new trades or open new trades. When would you look to close some of these? Because they, you know, all of them looking good. When would you look to close them?
So on most of these, I will take the profits when we hit the target. Yeah.
Okay.
So, you know, although Dash has gone 400-500 quite easily, it's still something. It's not going as aggressive as Binance. I don't know much about Dash, what's behind it, what it's doing, what, you know, if the guys are still working on it or anything. So I will take profits there. Adder might let run for a little longer, but I think it's if it doesn't go straight up and it walks slowly like this, take the profits. The exceptions are something like Binance. So what I've got on here is I've drawn an average sort of gradient, these two trend lines here, of its impulsive move previously. Okay, so that original move kind of adds up to this, and I'll take profits here when I see price coming back down to test these lines. If we get a close below these two lines, I'll close the trade. So it was here, but because it's run so hard and Graham told me some secrets about Binance, I thought I'd leave it open. And as soon as we come back to visit these lines, I'll close it out. But yeah, to answer it, all of these will close. I'll close all of these as and when you need to free up some capital for the next big move.
All right. Well, there we go. That's helpful and insightful. I find it most interesting that Graham is now the one speaking to fundamentals and not speaking to technicals. Graham, any comments on those before we wrap up today?
Let me give you a little bit of insights into some of the fundamentals on Binance. So let me share my screen briefly.
Yeah.
And while you're doing that, Graham, for those of you that are watching, we have a smaller audience today. I'd imagine it's because of the time today, but there will be a couple that'll tune into YouTube a little bit later on. But for those of you that are watching, if you have any questions for Paul or Graham, we'll take one or two. So pop them in the comments. You're welcome to do so on the chat groups or on the YouTube comments, and we'll go through some of those questions. So get them ready while Graham takes us through some of the fundamentals around Binance Smart Chain.
Yeah, I mean, I just think it's a really big trend that's bubbling underneath the surface of this whole crypto market, and that's the DeFi space. And it took me a while to actually do a little bit of investigation, but I'm glad that I did. So, I mean, my macro takeaways, there's some very interesting technological developments in the DeFi space. Obviously, there's a lot of fluff when it comes down to the actual projects and how they're raising funds and the tokens out there. So it's definitely the Wild West. But underneath it, I think there's some very solid technology that's actually being developed. And we're seeing an absolute flood of money coming into this space. So this website here, I mean, it's a couple of nice resources. This one's called DeFi Pulse. So this really is tracking the flow of funds into the Ethereum network. And I'll show you the Binance one. So we were at about, well, there were about $27 billion in value locked on the platform at the start of February. And now it's now sitting at 41. So let's call it 33%, give or take, increase in value in Ethereum, in the ecosystem at least. And if you compare that to Binance, which has only recently come on board, this is the opportunity I saw, is that Binance was opening up their smart contracts. They've got a massive client base that they can push into it. They've got a huge marketing budget. So those type of things adding up said, look, this is a potential opportunity for me to get ahead of the big money that's moving into this ecosystem. So you can see at the start of February, there was only just over $1 billion locked up on this platform, and it's now at 10. So that's really like a 10x increase in the total value locked. And I still think it's got a long way to go. And then just one other one to point out here is Pancake Swap. So they've got some ridiculous names they're coming out with.
Take us through that, please.
It's very little confidence when you're looking at the names.
No, listen, institutions aren't coming with those names, that's for sure.
I don't think this is the institutional space.
No, it's not. But, it's not the institutional space. It's definitely the clever head space, though, because a lot of your independent smart contract developers really developing some sharp stuff. But as you say, it's for independent retail investors.
And I think the whales are very active. So if you look at the Ethereum fees, it was costing up to $100 per transaction, which is frightening if you're trading or trying to invest for smaller amounts. So that's really it became a real playground for the whales and excluded everyone else. So Binance has kind of reduced that, because now you can transact for a couple cents. I think around about 25 cents compared to $100 is a massive difference. But this is Cake, which is the token of Cake Swap.
Us South Africans love that ticker, Cake.
Cake Swap is the equivalent of Uniswap in the DeFi space. So that's your what do they call it? An aggregator.
Decentralized exchange.
Aggregator, 100%. So that's what Cake Swap is essentially replicating in the Binance space, and you can see that the price action that we've seen is quite unbelievable. So yeah, it's been a good let's call it a trade to get into some of these tokens early, and obviously let that rising tide push the valuations up. But yeah, there's going to be other up and comers here. So if you're planning, if you do a little bit of due diligence, I think it'll be well worth it. If you can find a few small projects now that are set to explode, you may be able to pick up a couple. And then the next trend potentially is going to be Cardano, and then Tron as well. So I think this is a trend that could continue, where you're going to have these platforms open up their smart contracts, and there's plenty of opportunities in those spaces if you can get in early. So I'm sure there's some of the guys in the SA Crypto group that would be keen to do some research on that. I know Lindley loves his altcoins and a few others. So yeah, that's just a little bit of insight into that space.
Absolutely. I think you hit the nail on the head there when mentioning Cardano. I think it's still early for the likes of Cardano, and even Tron seem late to this party, because DeFi has been running for the last 6 months. It's been the flavor of the year, if you like. 2020 seemed to be the year of DeFi. Tron, as you say, there's got to be something coming out from Justin Sun and the guys, which times quite nicely with our interview we're hopefully going to release next week with Justin Sun. And all the stuff with Cardano, there's no two ways about the fact that she's going to move soon. Graham, anything else to add before I take our first question?
No, that's it for me, James.
Great. Okay. So this one's for you, Paul. We have a question from Calvin. Calvin's a fairly new commenter, I'd say. I mean, Calvin, I don't know how long you've been with us on our groups, but I've noticed your name only recently. But it's great to have you on today. And he asks about your yellow line in the chart there. What is that yellow line in the OBV, Paul?
Okay, so the yellow line, it's an indicator which is a volume indicator, and it's current. So the reason I use it is because it's a currently calculated indicator. Most indicators on TradingView are lagging indicators, so they have to wait for price action before they draw themselves out, or they tell you what you're trying to read off a chart, basically. And yeah, I don't think that's useful because it's behind your price action. The OBV, your on balance volume, is all of the little volume candles you see at the bottom of a chart. Maybe I can share it quick. Share screen. Yeah, I see the screen.
Not yet.
Share.
There we go.
Got it. Yeah.
Got you.
So yeah, all these volume. This is volume per candle, and what the yellow line does is it adds up all of these totals in volume and draws an average line.
Okay.
So we can see,
okay.
yeah,
So
that slowly the volume is increasing.
Is it like a moving average of volume?
Yeah, it's almost. Yeah, it's rather adding it up than averaging it down.
Sure.
So an average line would go through the middle, but because volume is increasing, you can see the line is going higher and higher.
All right, and that OBV stands for on balance volume.
Yeah, that's it. Yeah.
On balance volume. All right. Great. Well, thanks, Calvin. Good question, man. And I think that's it for today, guys. It's been, as I say, it's been a little bit of a smaller audience, so no more questions coming through, and we're pretty much out of time. Any other final comments from yourself, Paul? Especially if you have your chart up there, you're welcome to share any other final comments from those charts.
No, I think always take caution when you're trading. If you're new to it, trade small, do your homework. I've been there, I've lost the money, and yeah, you learn from it. Just don't make the same mistake twice. Yeah, it's old season, I reckon. Get in there, don't miss out. I think we're still early in the bull run, and yeah, good chance for guys to make some decent money. We want to see it in the community as well.
Yeah, absolutely. That's really what this community is all about. It's all about everyone helping each other and taking advantage of the huge investment opportunities that are available, and making sure everyone stays safe as well. Graham, anything else from your side?
No, but yeah, good to have you on the chat pool. Loving your charts that's coming through the group, so keep that up.
Yeah.
And yeah, I echo your sentiments when it comes to risk management and caution. It's going to be the worst to come out of this bull market with less money than you started with. So and big leverage can often do that to you. So yeah, nothing wrong with hodling through. I've definitely done far better in my hodl account than my trading account. Potentially by most means, but yeah, I agree with you. I think there's still quite a bit of juice in this bull market. So if you are still waiting to get in, look to buy those small dips and build a position slowly, because I think there's still quite a bit to go.
Yeah, and I think it's just so important. Those hodl positions are so important, just to see out the long term as a hedge against fiat currency weakness. Even Elon Musk is recognizing that with his tweets this morning. So make sure that you don't overcook your hodl position as well. All right. Well, Graham and Paul, thank you so much. It's been so great. It's been a nice, dynamic, fluid, different analysis today. Paul, thank you. I want to reiterate what Graham said. Your charts on the Telegram group have been wonderful. We've been trying to bring as many through as we can. And we really appreciate your input. Thank you.
Perfect. Yeah, thanks for having me on, James. Appreciate it. You guys are doing good work.
we'll definitely have you on again soon. And to everyone else watching, thanks for tuning in today. Don't forget to share our material on Twitter, on Facebook, wherever you see it, on Instagram, on WhatsApp or Telegram especially. You can forward on to your mates so that they join our groups. The more, the better. It's really all about supporting each other through this journey. And remember, we also have another Durban-based community called Block Alpha, who have sponsored this edition of Market Analysis, and they're going to be hosting a free webinar tomorrow. They're going to be launching a crypto signals group, and if you want to find out more, they have a free webinar tomorrow, 11 a.m. Link is in the YouTube description. Check them out. Everyone, thanks for joining us. From myself, James Preston.
Myself, Grim Tennant.
And
Paul Francis.
There you go. It's goodbye for
guys.
now. Cheers, everyone. Bye-bye.